All right, so I'm going to go over some of my trades today. Some that worked, some that didn't, and then a little bit about an options trade. So AAL here, you can see here when I zoom out on the daily, obviously sold off last year, and then earlier this year has kind of made gotten some strength here, and then really the rest of the year it's been in a range. Did come down a little bit, but now it's made another range. So it's kind of made two different ranges here. So it's not necessarily weak or strong. Um, so what I was basically looking at is the last four months here. It's made a top of 2250 and then a low of about 18. And we were seeing a trend line here. Got a lot of lines here. We were seeing a trend line that could potentially be broken. You kind of combine that with this low here and this low here, and we could get a turnaround back up towards to the top. So I was basically playing a breakout. You know, we had an indecision day here, playing the long above yesterday's high as long as I had a decent entry. And but so it didn't necessarily play out the way I traded it. So here, waited about half hour into it. It made a bit of an ascending triangle up to high of day. It did break out. I chased it a bit. However, I did think that it shouldn't get below this high of day level. If it did, it wasn't a breakout. So I wanted this volume to continue throughout this, and you can see here that it did start to dissipate really quickly, and then did get under here. So I got out. I did try it one more time. Probably shouldn't have tried that, but this just confirms to me that, you know, when I do have a good level, I'm confident in risking around that level, and I'll even get pretty heavy. However, price gets past that, gets through that level, or it comes back and gets underneath it. That's like a clear flag, and I will try and get out best as I can. So, but what's funny here is that later in the day, it came back up. So you can see here that it did sell off. It sell off after that failed break high of day, right? And then it sold off almost to the low of yesterday. Not quite that low. And then it did a V reversal here on the 5-minute. You could see a really good head and shoulders here. Took a while to happen though, or took a while to play out. But this is just sort of another example of how a swing trade or an options trade is quite different from a day trade. Because in my mind, I liked this for an options trade. Because let me get my marker out here. I don't know where it's at. You know, for the last 4 months, price has not been able to get down here. And then for the last 4 months, price hasn't been able to get up here. So until otherwise, this thing should continue to bounce like this. And if it does get through here, we're probably going to need some extra volume, some extra news, catalysts, etc. Right? So if I'm seeing price go all the way down here, and sure, it doesn't get all the way down here, but it gets to this low. So it gets all the way down here. I see maybe a indecision doji candle, maybe a little bit of extra volume. It's nothing special, but it's enough to tell me, hey, this thing might be bottoming out and it might be continuing its move back up. Or maybe it'll just go up halfway and then come back down a little further, come back down to 18 and then come back up, you know, something like that. This shouldn't be alarming at all for me for this kind of range trade. So I was thinking this was a good options play. And the reason why is because you have a good range with good levels, decent levels, I think, but you can you can take advantage of this recent sell off, just like you could take advantage of this recent up move earlier here. So you could take advantage here and take advantage here. When price does this, the premiums for options are going to be skewed one way, and then when they come down here, the premium for options are going to be skewed the other way. So when price came down here, I wanted to do a sell a put for some kind of price down below. So you want to put your option below or above a good level, or multiple levels if you can. So in this case, I wanted to do an option down here at $17 because I felt like I had this level to hide behind, it's 19. I had this really good level here at 1850 to hide behind. And then I even had some of this pullback earlier, this level here to hide behind. And so I have multiple levels there, and I did have a, I think I had some moving averages on there. Was it the 100? Well, I guess it is above or below the 100 moving average. But anyways, so back to the premiums. So when price comes down here, if I want to sell a put down here, that put is going to be cheaper because price is looking like it's going down there. So price is looking like it's going to go down there. So I can make more on that selling of a put, right? But me using my technical analysis, I know that, hey, we have support here. So there's a decent chance it's going to bounce. Hey, we had an indecision day here. So that helps for maybe the start of it. And then just in case, hey, we have an even better level right here at 1850 that, you know, if I did this option, price moved around a little bit and then came down even further, I at least have this to hide behind. And so this is potentially a good time to sell a put. And what I do is I have a way to mitigate that risk as well. So I sell a put at 17, but then I also would buy a put at 1650, just in case this thing really ripped down and got underneath and kept going. The buying of the put at just underneath at 1650 would save me from the continuation down. So I would only lose on the in between 17 sell and the 16.5 buy. Anyways, there's more to it than that for that part. But essentially, all I really wanted to go over was selling a put lower down here after the price is sold down for a bit. It's a great time to do it because that premium, you'll get paid a lot. And then if you have some good parameters and variables to help tell you that it's not going to go down there, or at least it's going to take a lot more than it looks like to get down there, then it's worth the risk, right? You have multiple support levels, etc. And then vice versa when it's going up. So say this thing then went all the way up and say it got to here, which it's done multiple times in these last 4 months. And this will take a while too, right? So this takes 2-3 weeks. And then from here to here took about, over a month. So this stuff takes a while. So say price went all the way up here, this would be completely, the premium that I got paid for would have worked really well, and that option contract would devalue so much if price got all the way up here. It'd probably be at 75-80% of the option would be devalued. And so I would just take the profit right then, probably get out early. Okay, so then say price comes up here, then I would want to do the other way, right? So then I would want to sell a call up here. And the same thing, price comes all the way up here. It's looking like it's going to go up. So that call becomes more expensive. So I sell it and make a large premium. And then I hope that, price eventually then bounces back down, which it's been doing over and over. And there's other things to do. Like when I sold this put here, if price kept going down and it did indeed break this 1850, I can get out of this position early and I don't have to lose all that much. So there's all kinds of ways to unravel your option and strategies to get out, or even maybe even get out and then get heavier short and turn it around and get a short position as it's going down. So there's all kinds of ways. So, but if price went up here, hit here, and then you wanted to sell a call, you have to ask yourself, is there a good level? Well, definitely this 2250 is a really good level, right? So as long as price doesn't get above it, I can sell a call somewhere in this area, just whichever one of these prices has a good premium and pays well and is worth it, then that makes it worth it. I mean, an even better selling call would be up here, right? $27, because look, I mean, not only do you have this level to hide behind, but then you have way up here this resistance too. So you better be damn sure that this is going to take a while for this to break through this level and then come all the way up here and then even break that. I mean, most likely it's going to, if it did come all the way up to 26, it would hit it and then it would sell off for a period of time. And by that time, that option might already be expired. So just wanted to go over my idea for that. I should have, and maybe I will, while price is down here for the next few days, try and do that sell put idea. I think it's a good idea. Yeah. Okay, so I also traded Facebook here. So on the daily, you can see here Facebook's been in a range. It's been in a downtrend for a bit here, right here. Then bounces off 310 and then has been more in an uptrend now. So now it's sort of at an inflection area where where it broke down from and had been in a downtrend for a while. Now it's been in an uptrend for the same period of time pretty much. And we're at this kind of last resistance point before really from here it's probably going to get up to all-time high again. So I was playing this resistance level here because it failed at it last week, gave a really good wick, sold down. You can really see the selling pressure there. People were not ready to buy it above there. And then even Friday, you can see price got all the way up there and then sold off. So today, what does it do? It gaps up here, tries to get up there, and then I was watching it up here and trying to see if it was showing signs of weakness. And if it was, I felt like it was going to be a good short, and that's what happened. So this is that higher time frame level around 353. This is the 5 minute. So you can see 5 minute opens up pretty strong, but then a pretty strong sell down candle, way more than 50%. Almost felt like an engulfing for a bit there, and then goes up, has some indecision. You can even see it makes a new high. So this is already one red flag for a breakout, for a breakout that's not going to continue. You get a new high, especially when it's that really good level. So you get a really good level, higher time frame level, and it's high of day. It breaks above it and then sells underneath. That already shows some weakness. And then you get it again. It holds up here. So, okay, it's holding a little bit, and then it gets underneath again. So just two big flags that this is not going to break out from this big level, or at least it's not looking like it's ready. And therefore, it's going to potentially bounce from it. And then you look at, well, what's the ATR? Does it have potential? And this line is the ATR. You can see price started right here. So had it broken out, it would have given you an opportunity for at least another half an ATR of a move. Plus, had it broken out with some really decent VPA, I mean, this thing might have completely restarted and done a whole nother ATR right from here. So you move the ATR down and you say, okay, price came up here, rejects. Now what is the potential? The potential is to come all the way down to a full ATR. And actually, what was nice today is that Facebook had really good volume. I think it was in the 120, 130%, which for like for a sell-off type of for hitting a resistance or a failed breakout, having a high volume is nice because that means you can get a really good move the opposite way. That means there's you're going to have maybe extra conviction on the downside. So yeah, so that was pretty much what happened on that. Got the put in a limit order here. So price was compressing up, making those failed attempts at new highs. You can see here every time I got above, didn't get that continuation volume, no VPA. It was making some kind of triangles, so I kept drawing different trend lines, trying to find out where I could enter. And then right around here, I felt like it was about to sell off. But then I saw an ask at 352.50. So I said, okay, I'm going to put in a limit order up here for it to come back up, do a retest, fill me, and then hopefully it sells off. And that's what happened. Came up, filled me, just went up a little bit more. I guess it went up to the whole dollar, went up to that higher time frame level one more time, then really started selling off, broke this trend line. I added in, so covered some at 350 whole dollar, and then got in heavier, or added my small position I sold. I got that back in, and then added once it really broke underneath this level here, retested and kept going. So you can see here it moved a full ATR and more. You can see the market probably helped it a bit too, but it moved, maybe 1.4 ATR. So that was really good. How I can repeat this, I think, is finding good higher time frame levels, and finding the higher time frame levels and really watching price action around there. History repeats itself. So if you're seeing a range, you play the range. If you're seeing bounces at a level over and over, you continue to play the bounce. And it just so happened that this was a good level, and it was an even better level after it confirmed the bounce here, and then it did it again Friday. And so it was almost sort of fresh too. This higher time frame level was pretty fresh today, so it was a good time to do it. Yeah, that's pretty much all I got for that. I traded Walmart into the close. Actually, I traded Walmart and Disney. Walmart, I tried this high of day breakout. I just didn't want to lose my P&L, and so I kind of got a little scared. Plus, when I got in, I just felt like this thing was so slow. And but you do see that there was some little pops of volume into the highs, and there was a good, it looks like, I don't know, 50 cents. Basically 50, 60 cents was to be had there. Oh well. And then Disney, I traded into the close. So this was pretty cool, actually. So what happened was Disney been selling off in a big downtrend after the earnings. For some reason today, so there was a really good level, not a really good level, but I would say a pretty decent area here, right? 2 years ago, this high, we came down to it. The level's not perfect, but you do see that price does make a low and then kind of comes back above, and the level and the VWAP sort of coincides, and it sort of hits a bid and makes a nice run for the rest of the day. And at this time, I noticed that it selling volume started to come in. So pretty much just made a head and shoulders. Hit a bid here, would have been a good decent long, which I thought about, but I had missed. Then it came up, made a little shoulder here, some little flags here, and then its final, like with a doji here, and then a head, and then you have a shoulder here. So I played this shoulder, right? Pulls back, makes a new 1 minute low underneath the 155. I put a tight stop right here above that doji, and then my target was VWAP slash 154. I did feel like this was going to give it some trouble though. Didn't give it too much trouble, but I did partial twice in there. And then you can see here, this was pretty cool. The market was selling off so hard, and this thing was really fighting not to sell off, but eventually it really gave out, and this thing shot down so hard. This was pretty cool, and this was not the close. I mean, there was still 10 minutes left to go. The remaining 10 minutes was this little consolidation here. So I got a good couple hours out of it. I think I got 3 units out of it. I was out of most of my position here, and it started consolidating, and I liked it holding this level here. Actually, it was more just like, I just felt like it just found a little top right there. So I added in, brought my stop closer, and then added in one more time right in the last minute. I was like, well, if this is not going to break, we could potentially get a little bit more down move. So I added in even heavier. My stop was really tight, and then got a little pop down, and then got all out right before the close, like I think 3 seconds before the close. So that was pretty cool. So that was fun. I felt like I was pretty much in control with that. So thanks.